Hi, what's up, guys? This is Max with the Week 2 Bitcoin forecast, and we're going to see what's up with Bitcoin. It's doing some weird stuff right now. As a quick recap, Week 1, we were looking for Bitcoin to break 215 to confirm our bearish bias and give us our 160 targets, 135, 88 targets. That might have been put on hold. This week is going to be interesting, but also week week one, I said, I was watching these market structure highs, and they did get taken out, which would be considered a bullish event, especially since that I don't really view Bitcoin as a market that really raids stops on any significant time frame. Some people in a lot of markets, there's going to be a shitload of buy orders here, and that's going to provide a lot of liquidity. If there's a lot of people that maybe shorted around, let's get my super technical tool. If a lot of people are shorting here, they're shorting all the way down, they're going to put their stops here, and to protect themselves, they're going to be buyers right here if their stops get trapped. That's what a stop rate is. So when the orders go up here, the market's just going to see a lot of buyers, and then the market makers can assume the opposite side of that position if they wanted to stop rate and take it lower ultimately. I don't really see that happening a lot in Bitcoin, so I'm going to be cautiously bullish for this week. And you know what ICT told me, and I think he learned it from Larry Williams. They're two people that have made millions in the markets. Pretty smart people. They say the market ranges 80% of the time and it trends 20% of the time. So a lot of good analysis can be done just by analyzing what's going on in the range, or looking back at past ranges. And what I mean by that is basically this is a range right here where price action is has been confined. Technically, this would be the high and this would be the low, but the most orders have been taking place in this range, and even the past, what is it, maybe a week or so, this range right here has really seen a high of, we'll call this support, 228, and I think this is a good spot to be looking at along, because markets range 80% of the time. When they break out of that range, and then they form support at a place that once was resistance, that's where we want to be making our trades, near support, and because we can just limit our stops to be as small as possible. And the bearish bias that I gave in week one is still true. We're still looking for 215 to be the ultimate doom signal for Bitcoin. So placing stops below 215 can give us a pretty good risk reward to any long-term position trade we might want to take. If we got in at 230, we could safely put our stops at 215. Maybe a little bit below that, you'd be having like a $20, $15 stop loss. And it's a pretty safe long trade, especially since we seem to be finding support on these range highs. So these range highs are now becoming our range lows. And I'm not really too anxious to get into a trade right now, just because of another fundamental of markets, of expansion and contraction. So markets are going to go through a period of expansion, and that's going to be followed by a period of contraction. And that's just a Larry Williams concept that was taught to me by Inner Circle Trader. It holds true in every single market, and basically, we can go back and kind of do some, looking around. But we see, let me get my handy dandy notebook. No, not notebook. This ain't Blue's Clues. But those are the days. Anyway, we can see big expansion days, and then we can see that that's followed by range tightening contraction. And then we can see how that leads to expansion days, and then we can see how that leads to contraction. Then we can see some more expansion, and then we can see the range contract right here. Then we can see, expansion. All this is expansion. Even this is contraction here. But we can see expansion, and then we can see all this contraction that we're in right now. And that's what's going on right now on a smaller scale. I mean, you can see this happening on a 1 minute time frame if you wanted to. But essentially, we just what have we done in 3 days? 218 to 260 something, so like $40, 40 something dollars. We've expanded, and it would be smart to assume that we're going to consolidate for a couple days. We're going to contract. What that means is we're looking for like an average daily range to be in like the $15 range, which is very tight, maybe $20, which means it's not a very good scalping environment, which means I'm not looking for scalps. I'm looking to buy a little more time, use this contraction phase as just to gain some more information as to what the market's doing. So if we see that nothing drastic happens and it seems like we're basing around this key level, it's also an optimal trade entry to go long. To show that, yeah, pretty much a perfect optimal trade entry to go long. So we can just, there's no hurry because we're going to be contracting for a few days. And yeah, like I said, $15 range means we're not really looking to scalp. You're just going to get eaten alive if you scalp, really. I feel like that's a big problem a lot of people fall into as traders in Bitcoin, because it's basically where I started from. Everyone was posting 5 and 15-minute charts, and I felt like, well, if I just traded a huge position size and price went up $20, I can make $20 per coin, and that's good money. Or $15 in a tight range, and that was appealing to me. But I just want to encourage people to try a more longer term approach, because I feel like the more trade you take, the more times you're going to be wrong. And what happens when I feel like a lot of scalpers are scalpers because they're not really confident that they can call the market to go $50 or $100 higher, which is really the basics of all trading. I mean, you need to know the higher time frame pull of the market, and you can only establish that by being an avid position trader. So I think every professional trader trades long-term positions, and only until they've proven themselves a successful position trader do they go in and apply that knowledge and that discipline and that psychology to smaller time frame stuff. And I feel like a lot of traders in Bitcoin kind of just start out like me on the 15-minute charts, and I don't think it's optimal. Maybe you have determined that you can do it optimally through, good record keeping and some deep thought, some big experiments in the market. But I just want to present that as an option to people that haven't considered it an option, that you can do these position trades, and they will really help your trading. Yeah, so that's basically all I have to say about this week. This level is key that we're at right now. It's an optimal trade entry for the long. It's also support. It's like, we're sitting on the last week's high, which is pretty significant. If we were to break down from here, we'd be looking here, 215. And if 215 broke, from video 1, we gave targets of like 160, 135, 88. It'd be pretty bad for Bitcoin. But this big rise has got me cautiously bullish. One thing that I really don't like to see is these railroad tracks, where in one day price went from 235 to 260, so it rallied almost $30, and the exact next day price just absolutely took away all of that progress, which is never really a good thing. Railroad tracks are pretty pretty strong price pattern or candlestick pattern. But I mean, shit, I gotta be bullish here, cautiously. I don't know what else to say. If we were to be bullish from here, we would first start off on our weekly higher time frame charts and kind of see what we've got going on. This 289, I don't know what this is doing here, probably a mistake. We would really be looking for 300, 315, 320 as our equilibrium price that I've done a lot of talking about. What we can see here is if we measure this swing, the extension of that, so we're measuring this swing right here. This is a swing. We're going to see an equal and opposite reaction, and it nails it perfectly, and then it comes back up to 300. So this cycle is pretty much complete, and we're just we're looking for the new trend. And that's why I don't advise scalping or taking profits too soon, because this next move is going to be pretty huge. And I guess we can let's just look at something else. Let's go down to a daily. But anyway, on the weekly, there's still other key levels that I should do before I do anything else. There's also a lot of price action at 400. We'll be looking around 400. And there's a lot of levels in between there and now. But I think 400, if we do, start popping up, 400 is definitely in my sights. Might not make it there, but, it's always good to be optimistic, right? No, don't be optimistic. Anyway, yeah, so we're just gonna, I'll just illustrate this example another way. So let's just look at this price action. And let's say we see an equilibrium, kind of like right here. We looked in the past, we see a lot of consolidation here, we see price respect here, and we see us put in a high right here. Well, we can expect this to be an equilibrium in the market, and if we measure this swing, the extension, alright, 200% extension is going to be our target. Once that's fulfilled, this cycle is pretty much done, and then it's just going to consolidate until it goes into the next trend. And that's very much what's going on here. And you can kind of see this whole thing here as a range that was just building up for another huge trend move. And that's what we've got going on right here. Is we're just ranging, waiting for that next big move. One thing ICT told me or showed me was this 918 EMA cross on the daily, which signals a buy or sell program for the market makers. And we actually have bullishly crossed when the shorter term EMA is above the higher term EMA. That's bullish, signals a buy program. The danger that you run into here, these EMAs are going to be worthless in a ranging market. You're just going to get whipsawed where they kind of come together and spread apart. So that's kind of why I don't use too much indicators. For the most part, they're worthless unless you really know what you're doing. And so we are anticipating the next trend is definitely going to come out of this range. And we have a signal with this cross that potentially it could be bullish. And so, that's just my game plan right now. Of course, we could just range more, and then this would just cross over, and then the 18 would be on top of the 9, and then we would be bearish. And so you just gotta know, that's kind of the importance of knowing what market profile you're in. And yeah, I fully understand we're in the consolidation market profile. I could be getting faked out with this 9 crossing the 18, but with all the confluence of everything else sitting, on top of last week's range, this big explosive move out, taking out a key market structure high, it looks like we're building up to go higher. And the good thing about this is even if you kind of gave it a few days, confirmation, gave it a couple days to base here, then you could put the trade on at 230 and your stop loss would be 215. And I feel like that's a good setup, man. That's just a way to trade. Your profit target, you'd be taking profits at like 320 and 400, hopefully. But definitely 320. And yeah, I guess that's all I have to say right now. I guess the big things to know is that we are consolidating, we're ranging, and the next big expansion move is going to be pretty fun to ride out. So I wouldn't be looking to take profits too soon. Once we got a clear indication of the next trend, we're definitely not looking to take profits, at $20 or $30 per coin. We're definitely looking to let our winners ride, and we're looking for that home run trade. And that's my plan for this week, is to get in sync with that home run trade that I think's coming up. And yeah, that's all I gotta say. So until next time, good luck and good trading.